What's going on, guys? It's Kyle from K Capital. It's about 11 o'clock on February 6th. Apologies for the delay in the latest video. Really, the market has been pretty quiet for the most part. First thing I wanted to do today was really go through the general market at a macro level, take you through the Dow, the Russell, the technicals I'm seeing there, then take you through our watch list, and then finally take you guys through our open positions, just to make sure everyone's on the same page and what I'm looking at, and really what the levels specifically in price on the technical side that I'm looking at. So with that, let's get right into it. The Dow is finding support, which I'm actually pretty surprised at. The 1600 to 15900 level continues to hold, highlighted here in blue. I still think, and I'm still bearish, and the reason I, really am bearish for the time being is the fact we're still trading below the 200-day moving average, and we have now stayed there since August, if not July of this past summer. So with that, we're seeing a little bit of a bounce. This long-tailed candle here, and here are indicative of a reversal. Do I think we go back and eventually, in a short term, test the 1700, maybe even 17200 level, that range? I do. I think in the short term we test that, but I think at the end of the day, the reality is that we're still in a potential massive turnaround here. I think the fact that we have stayed below the 200-day moving average for this long of a period is very bearish. Frankly, we haven't done that in a very long time. The latest pullback was to this magnitude was back in 2011. So I think, with quantitative easing, or basically the Fed propping up the federal funds rate going away, I think it's now a matter of people, again, moving away from equities to bonds, and the general impact of that from a monetary policy is, being reflected in the stock market. And I think that's just a matter of time before we break this level. Hopefully we hold. Obviously, I'd rather be in a bull market than a short-term bear market, but we trade both sides of the market. So, with that, we can take a look at the Russell, and you're going to see a similar story here, in the sense that, again, we really have no support. We broke through this 1050 level, I think, 2 weeks ago. We came all the way back down to, I think the low here was 959, and we're trading below all of the exponential moving averages. So, this is definitely a bearish story for what we typically trade, which is small cap stocks. I think to go long in a very small cap space would be pretty naive. Friday we saw this big candle more or less testing the lows from the prior week. Again, I think we trade down in the small cap space, and I think sometimes you can make the argument that the small cap space is a leading indicator for the general overall market, with the logic really being that smaller cap companies can't take as long of a hit from a macro fundamental standpoint that larger cap companies can. If you think about it, it really makes sense. They have less really exposure to the capital markets. They have less exposure to the debt and equity side of the house. And really, you can make the argument that, they can't really iron out the harsh realities of a bearish market as long as large cap companies can. They have less cash. So there's really a fundamental tie in there too, to really why I think the Russell could be a potential leading indicator for the overall market. So with that said, let's kind of go into our current positions. With Weight Watchers, we are short here. We are currently up, I think, 14% in this. From a fundamental thesis here, this really just rallied on Oprah's investment. The short side of the house, nothing really changed fundamentally, in my opinion. We actually shorted after she made the announcement she lost 26 pounds, which, congrats, Oprah, that's great, but there's no reality really on the fundamental story of Weight Watchers. The stock went from, at that time, 11 to, I think, 15. We definitely shorted at 13, and we're seeing it to start to test this gap level. If we break this level here, and again, just to highlight the specific point I'm looking at, if we test and break this, which we are doing right now, I think eventually we do break it, we'll fill this gap, and that's all the way down to 7, so that's going to be a really nice return for us, upwards in the 40 to 45% return if we fill that gap. So still short here, profitable trade for the time being, and I think it's going to turn out to be a good one for us. Next one is SJR, which we are also short from want to say 1630 to 1650. So we're sitting at a little bit of a loss here. I got a few questions the other day. Why didn't I close at 17 or cover? Really, I didn't, because this level was pretty strong, and you can see that we sold down here in this gap, opened here, closed here, and just really sold off, continuing the next day. When we tested that level before, the same thing happened. So we shot all the way up here and it sold off. Shot up here, we sold off. So I kind of wanted to see how it would react to this area in blue. And it reacted exactly as really what I thought. It tested it and sold off. And if you saw Friday, we saw a really large candle indicating additional selling. So I think this really was, technically it was really not a dead cat bounce in the sense that, we saw a nice movement upward and it's going to really just pull off and sell off. But I really think it's just a product of, there's a lot of bearish momentum here, and I think it just continues into next week. I think if we test, just to zoom in here, if we test this level here in terms of the 20 and 25 EMA and we break that, I think we definitely, retest 16 and below. So again, just being patient with this to let the trend play out. But moving on to our new long alert, SIEN. We went long, I think, at 9:14, so we're sitting on a little bit of a loss, but I did not sell this yet because we really haven't broken the trend line here. I think this is, going to be tested again. I think we're starting to test it, but I think, it's going to consolidate, and you're going to see a tighter range here in terms of the highs and the lows, and eventually I think we pop and break this level of resistance to test the 200-day moving average at $11.50 to $12. But right now you can see that, prior levels of support here from the gap are still serving as now resistance. So, but we're seeing, higher lows as this trends up. So I think it's just going to be a play of, let's see if we hold this pattern here. This large green candle was definitely a large breakout on volume. And one thing I alluded to during the week, actually yesterday and Thursday in trading comments during the day was, one thing I look for is on a high green candles or high volume green candles is, a test of the midpoint. And so what do I mean by that? So basically, you have a really high volume day and you see, a test of resistance. And what you look for is really a test of the midpoint of that candle. So in this case specifically, you see that we have a high of 963 and a low of 757. Take that difference, divide it by 2, and take that number off the top, and that comes to 863. And if you look, we haven't tested or broke through that level. So I think here we might have hit 840, but it bounced up. Here we hit 850, but it bounced up. So I think this is a good sign because we're starting to see that, people are still buying at the midpoint here, just like they did on 122 and just like they did on 111. So I think that tells you that they're still buying support here, and I think eventually you'll see another day like this on large volume and we'll break through that to test 12. So that's something that I think should be a good trade for us. Again, it's just a matter of being patient. And then to the two watch list stocks I wanted to get to was AXLL. So this is a short opportunity for the time being, and I alluded to this during the week also, was the fact that when you look at a gap play like this that's in a bear trend, so it's below the 200-day moving average, one thing you want to look for is the test of the third candle, or the test after the third candle of the high and the low. And so what does that really mean? So basically, you saw that this gap, and of the 3 candles after the gap, there's a high and there's a low. So where is that? It's going to be, of these 3 candles, that's the low, that's the high. If that happened here or here, regardless of where it is, that's really the area you want to look for a break of. So once that's broken, either down here, we'll go short, or potentially, but I doubt it, we would go long here. And the reason I say I doubt it is because we're still below the 200-day moving average, and I don't want to go long a stock in that situation. I'd rather be short here and wait for this to break and then fill that gap. Now, you can make the argument, if you think you're going to go short, why wouldn't you short at these higher prices? Because this was really a momentum play off of a potential buyout. So there was news that the company more or less was going to get bought out. They had a tender offer for, I think, their stock, but they rejected it. So it's risky because obviously the company who made the offer can go back and they can revamp their offer and quite easily this could jump another, $5 to $10. So I don't necessarily want to be in a position to where I have confirmation, or I don't have confirmation that this is trading down. I'd rather wait to see that this level breaks and then know that, okay, news is dying down and we can go short here comfortably with less risk to test, the EMA ribbon here and then potentially fill that gap. So that's what I'm looking for in that position. And I think the last one was a new one. It was VHC. So similar story here in the sense that it gapped up, sold off. We're starting to test that gap, but we saw additional buying. So again, I'm going to wait for the 3rd-day candle, which will be Monday, and let's see if we can start to see some selling pressure. Again, this was another news story, but the one thing I'm looking for is the same thing, to see if we test this low, we break that, and potentially we can fill the gap from 6 all the way down to 480, 450. So that's really it. There are the positions we're in. That's my kind of commentary on the overall market. Please, if you have any questions, shoot me an email, KyleMatthew@kcapitaladvisors.com, and have a great weekend, guys. We'll talk to you soon.